some of you have actually helped us do, thanks Rob. Some of us have
Video
actually
blog
helped,
content.
Do some repair work. AIM has done our roofing. We're in the midst of a renovation project that is one of the larger renovation projects that I've ever done. And that's gonna be a little bit of a showcase for us with our niche that we have, which is renovation lending. And others of you have helped get our team and our recognition here in the Valley to be a little bit more robust. So thank you, Rob, and thank you to everybody that has referred us to your friends and family. What we focus on is residential lending. Residential lending can consist of FHA lending, rural lending, also known as USDA, veterans VA loans, and Fannie Mae, Freddie Mac conventional loans. We do not do things like portfolio loans, meaning we must sell to the secondary market. So an example of a portfolio loan is a local institution like a Farmers or a Home Savings, where they basically lend money out of their own vault. They have their own money that they can lend because they have deposits. AmeriFirst is not a bank in that capacity. We are a residential mortgage bank. We do sell direct to the agencies, and so that's very powerful as it relates to us being able to make our own underwriting decisions. Why that's important is because we also service our loans. We service over 98% of our loans. That's actually more than most credit unions can say. So when you think of community-based lending or local lending, somebody that is going to be there for you to be able to answer questions related to things that are important and near and dear to you, you think of those local institutions, and I would like for you to think of AmeriFirst in that capacity. Why that's important for you as well and your friends and family is because when we talk to those individuals about decisions that they're getting ready to make with their mortgage, we're not solely interested in the transaction. We're not a transaction-based institution where we, get the loan and we're off. We're really trying to help people make critical decisions, a decision that you'll probably make 7 times or less in your life. So by a show of hands, how many people have done, we're going to talk about purchase transactions. How many people have purchased 7 homes in the room? Me. Okay. By a show of hands, how many people have purchased 6 homes in the room? 5.
Keep going down.
4. One person has purchased 4 homes. 3. Okay. Of that, then how many people have refinanced one of those homes? So you've got 4 mortgage transactions. How many people have refinanced twice? You get my drift? So if we look at the room, and we've got 3 transactions that are purchase-based, and we've got, of those 3 transactions, that's where most of the hands went up, only 2 people raised their hands when it's been refinanced more than 1 time. So the math related to how many times you make a mortgage decision in your lifetime is 7 times or less. And so when you're making a decision 7 times or less, it's important that you make those decisions not just based on the things that are talked about in the media, which is important. And those 2 things are closing costs and interest rates. It's very important. If we were not competitive with closing costs or interest rates, our doors would be closed. What's important is helping those individuals make decisions about cash flow, types of lending, how much money do they want to use when they're actually making the transaction. Why do you want to consider mortgage money having larger loans rather than taking a larger amount of money out of your pocket? And that's because mortgage money is so cheap. We can give borrowers $10,000 for $45 to $70 a month, depending on the type of loan that we're going to do. So when you're talking about $45 to $70 a month for $10,000, there is not another loan that you can do for that type of monthly payment. And so when you're talking about 30-year fixed rates, 15-year fixed rates, 20-year fixed rates, whatever the amortization might be, and there's no prepayment penalty, and you have a lender that's going to work with you and service your loan and sell less than 2% and help you make those critical decisions that you're not going to make very often, it's important that you try to hit the nail on the head. And so what we really focus on is trying to get people to sit down, slow down, and think. Because when you do that, you will typically make better decisions. What most oftentimes happens is people will sit around, drink coffee, it's a Sunday, they've been in their house for 10 or 15 years, they're ready to buy another one or build another one, and they go do what? What do? They get in the car and go look at houses, right? Okay. How many of those people do you think actually get pre-approved before they go do that?
None. 2%.
Very few.
2%.
Very few, about 15%. So 85 people out of 100 just get in the car, drive around, look at shiny objects and say, hey, I like that house. Then guess what they do? They talk with the realtor that was there, or they talk with a realtor, someone that they may know, or they talk with the for sale by owner contact, or they talk with somebody other than a lender. You know why? Because it's not fun. It's not fun to tell somebody what your social security number is. It's not fun to tell somebody what your birthday is. It's not fun to give somebody your tax returns, Donald Trump. And so when you talk about all those things, it's important that you realize the shiny objects can only be obtained unless you're gonna write a check, which you can do, that's called paying cash. There's two ways that you can buy a house. Well, there's three. You can assume the mortgage, which still involves financing. You can pay cash, or you can get a traditional loan. And so traditional lending is something that we like to coach. And we will coach you on all of those different loan types. And there's some important features that we bring to the table that most lenders do not. And one of those features is pre-approval strategies. For those of you that have done loans with us personally, or have referred friends or family, what we do is we sit down and we actually go through their finances. We give them a copy of their credit report. We consult with them well before we're taking loan application. And what you'll also find is if you've done that, when it's time to come in and sign the loan application, it's greased, it's easy. And that's really where anxiety begins to hit the fan because they're not understanding what their payment is. They're unsure about how much money they're gonna need to fund the transaction, also known as funds to close, and you're gonna be doing the right math. Recently, I actually had a controller for a manufacturing company that was working with another institution, more of a regional bank, that had been looking for about 100 days, about 3.5 months with their agent. That realtor is a good referral source for us, and she referred them early on. They did not call. And she just referred her son 2 days ago. And she knows that he's gonna be buying a house in Washington State. We do not do lending in Washington State. But I walked him through some things to pay attention to. He's in the military and started giving him some ideas to consider how he might wanna purchase a home in Washington State. So it's those kind of relationships that allowed her to be able to eventually convince this controller to sit down with us. This controller had been looking for homes and thought she had everything figured out. And she's got an accounting degree and she really understands the math and she understands how things are done as it relates to numbers. But what she didn't really understand is how the mortgage world worked. 3.5 months of looking, she had not made an offer because she couldn't find anything. Thank you. Within 7 days of coming in and sitting down and talking with us, she had decided that she did not want to work with that other lender because they were not communicating by email the way that she needed them to. They were not communicating by phone the way that she needed them to. They were a little bit difficult to get a hold of. So that prompted her to sit down with us, and within 7 days of sitting down with us, she had actually put in an offer on a home, and we just closed her home last week. So 3.5 months, looking, can't find anything, unsure what she wants to do, types of loans to do. One of the biggest reasons that she sat down with us was because the homes that she was looking at, were in need of repair or renovation. And that's a very big niche that we offer. It's not the only loan that we do, but I will tell you, if there's 10 lenders in the room and you talk about a renovation loan, 8 of them get up and walk out. They either don't have the product or don't want to do it. It's more technical, but it's a lot more rewarding. After we taught her that, she considered those loan options. She went out and looked, and lo and behold, she didn't do a renovation loan, but we did her mortgage. At least she had the option. She looked, it expanded her horizons. She became more comfortable. She started to think about other opportunities that she was not given initially. 7 days later, she's under contract, she owns a new home as of last week. So that's a little bit about what we bring to the table. Questions, thoughts, comments, Sam?
Brandon and I have been going round and around for about 3 months because I had tunnel vision of why I wanted to do this transaction. And after telephone calls over 2 days and his frustration level being high, my frustration level being high, we finally said, let's sit down with my wife and I, so we did. The end result was that I no longer have tunnel vision. I now know exactly the position I'm in, what I can do, and how well I can do it. And so it gives you a relief. When we walked out of there, it was like, the light bulb went on. And you say, wow, okay. And so that's what he does. And
No
he does a very good
papers,
job.
no signatures.
Nothing.
Just blank pages, sitting down illustrating math, sitting down illustrating ideas, and enriching their way of thinking so that when they can go home privately, they can have conversations without me in the room and have those conversations be a little bit more well-rounded.
But the first thing he made us do 3 months ago, even 4 months ago, was get pre-approved. So before we did anything, we filled out his application so that when we did start to see a property, we could say to them, hey, listen, we're pre-approved. So you don't have to worry about that. And even one of the people that we negotiated called Brandon. Brandon said, this is the deal. And they said, okay, fine. And he even tried to work out a deal for us that it just didn't work out. But he does a great job. And before you do anything, if you just want to know what your situation is and what you have your ability to do, you got to sit down with him and have him help you.
Other questions, comments, thoughts?
Thank you.